All right. How's everyone doing? Appreciate everyone coming late in the day, after work, when most people are tired. I appreciate, our whole team appreciates you being here. If anything today, we want you guys to walk away with value. We have a lot of questions that we've received from the Eventbrite registration, and hopefully we cover all of them with our presentation. If there's something that specifically you want to ask that maybe we have not covered throughout the whole thing, feel free to just let us know. So today is the home buying workshop. In this event, you are taking an important step towards your home ownership goal. Today will help you gain a basic understanding of how the home buying and home financing process works. When you leave, you'll know what to expect and be better able to make informed decisions with some of the top home buying tips in your pocket. So today we'll cover market seasonality and interest rates, how that affects, how that has played out in the last couple of years, and how we anticipate it for the remainder of the year and moving forward. The whole process for buying a home, getting pre-approved, and the types of loans, types of approvals that you might see and encounter, and you might entertain actually getting if you're looking to purchase your first or even investment property, second home. The home search itself and mortgage calculating tool, so you'll be able to run some numbers if you haven't before, or if you haven't talked to a lender yet. We'll make sure we do a run through of that. Writing an offer. The offer is probably one of the more intimidating things that you'll do because it's the first set of documentation. Usually it's maybe 100 pages plus if there's seller disclosures involved too. So we'll definitely talk about that. We'll also talk about specifically how contingencies affect the offer, and also from a listing agent perspective, what a seller would want to see in an offer, especially in this competitive market, so you guys would gain an edge, and also something that our buyer's agents will share and talk about. The closing process, what the escrow process looks like, what's involved, who's involved, and then of course the remainder of the time we'll definitely eat. I think we have some alcohol coming, maybe not, just kidding. But we'll have a Q&A session. So, first is market seasonality. So, Jenny's going to be covering that, so give a warm welcome to Jenny.
Thanks everyone for coming. We're going to today create some of you guys as homeowners, and I see the youngest homeowner right here. So, give them a round of applause for being here today to learn. And so one of the first things people ask is right now a good time to purchase? So right now is, there's going to be a different amount of seasonality, and the first thing is based on the timeline of the year. So looking at the year, this is just some of the, we're in right now February and March. So inventory is not as high, but more people are picking up their search in the market. So some of the key months that we usually typically look at are January, April, and September, and then December. So January is just the beginning of the year. People have that New Year's resolution. I'm excited, I want to buy a home. Then April is a key month because that's when taxes are due, and a lot of people are filing their taxes. Okay, this is actually how much I can afford, and be able to send the taxes to a lender to figure out this is the amount we want to look at. And then September, a lot of people start looking between March, April, and then September because it's after football season. So a lot of people are spending their weekends watching football, maybe on Sundays, so they don't have as much time looking at the open houses. And then sellers also typically know the best time to sell is in the spring, summertime. So there's more inventory at that time frame. And then September, a lot of people want to get their kids into the school year before then. So they want to get in before September allocation, and then December is the end of the year where you'll see a little less amount of people out there in the market or less homes in inventory. But overall, it's all about your personal timing too, looking at what your current situation is, what you're paying for rent, when the lease is up. So ultimately, there's never a wrong time to purchase. And there's a great Chinese proverb that says, the best time to purchase was 20 years ago, but then the next best time is now. So to start building your wealth, not paying rent, and building equity growth over time. So looking at historical interest rates is also another key factor to realize the timing of where the market is right now. So I'm not sure, Assad is our lender today with US Bay. And what are today's interest rates that we're getting on a 30-year fix?
They're close to an all-time low, so 30-year, depending on your scenario, of course, but the low point is around 3.375 on a 30-year fix.
And that's thank you. So that's a great big indication of where the market is, because more people can afford a bit more. So a lot of people are entering the market. And if you're looking at probably when my parents bought their house in the 1980s, it was still a hot market, and that was when the interest rates were around 16 to 18%. So it's a bit crazy compared to 3.375. So, and then if you look at the base of inflation, inflation is about 3%. So you're basically getting free money from the bank to invest into property, to invest, and then build equity from it. And some of the other aspects, I'm going to go to the whiteboard here of key time frames that we're going to look at. And a lot of people say, hey, why now? I'm just going to wait for the recession to hit, for the market crash to happen. So we're not really sure if that's going to happen. We don't have a crystal ball. But some of the historical timelines of what happened and what caused that in the past, in 2000 to 2007, the market went up significantly. And does anyone know why? Jeff. Do you know why, Jeff? Why the market went up significantly prior in this time frame? Anyone else know?
Prime lending?
Yes, awesome. So there was subprime mortgages. It's on the screen as well. So subprime mortgages. What that means is people would just go to the bank and just say, hey, I make $1 million, I want to buy X amount of homes and buy it as investment properties, and they were buying, getting a lot of adjustable rate mortgages where it was a low 2%, but then eventually the market picked up and their interest rates doubled or tripled. So their monthly payments doubled or tripled, so they couldn't really afford their homes anymore. That's what caused in 2008 to 2013, that was more of a downturn. So there was a lot of short sales, which means people couldn't afford and leave their homes, and foreclosed homes. So foreclosures are where the bank takes back the house. So now nowadays the market has picked back up in 2014 to 2020. It's picked back up, but the difference is that there's no more subprime mortgages. There's also a minimum, usually of 620 to 680 FICO score. So that's your credit score. And before, people were getting homes at 400, 500 credit score back then. They didn't really check. And then there's also a debt to income ratio, which we'll go over to figure out how much you can afford. Basically, the debt, let's say if you're making $10,000 a month, the max debt you can have is 45% to 50%, depending on which bank. So $4,500 to $5,000 per month in debt of your monthly payments. So these are some of the biggest factors, and then there's no more subprime mortgages. So we do foresee, at least in the Bay Area, the market to be very stable. And that's why most of us have, on our team, have invested in the Bay Area as well. And just want to get a scan of the room here. Who's currently renting? So about probably 2/3 of the room. And who's currently who owns a house and looking to get a second investment. So a few other examples. So then maybe the others are living with their parents, getting free rent. So if you're looking at the over time, that what rent is really costing you. So figuring out what the average per month in rent. Some people are paying, I would say, about $3,000 per month for a one-bedroom or so. And then remember in the packet that we have, there's some fill in the blanks that you guys can put in. So if you're looking at, you're paying $3,000 a month in rent, over 5 years you're paying $180,000 towards someone else's mortgage. So that's a down payment here in the Bay Area. So those are some of the key things where we'll go over to figure out how you can pay yourself and do more savings to build your own equity versus paying your landlord that mortgage. And there's a lot of great programs with low down payment, 5 to 10% programs that Clara can chat about as well. So looking at renting versus buying. So some of the key aspects of purchasing a home, you're able to build equity over time, your home will appreciate. The Bay Area, we've seen from 5 to even 15% appreciation in a home. So to give an example of when I bought my house in 2016, I bought it, created great strategies and leveraged a home equity line of credit from my parents' house for the down payment. So it was all bank money and got the mortgage on my own, and then built that, and then, so I bought it at $870,000, and now it's worth $1.2 million. So in less than 4 years, 3.5 years, it's been able to appreciate over $330,000. So in that time frame, that's more close to $100,000 per year that was sitting on it, and now I'm currently renting it out. So the renters are paying for the mortgage in that property. So it's been able to be a lot of great leverage to build on that. And some of the other aspects are you do get some tax breaks, and double check with your tax accountant since we're not tax professionals here, but you get $10,000 of property tax deduction, and then up to $750,000 of your mortgage interest deduction from your yearly taxes. And then you make your own home, there's no lease expiration. A lot of people who are renting a home here, their lease goes up every single year, and versus if you're getting a 30-year fix, you're pretty much having the same payment every single year. And then you can figure out what your monthly mortgage is, and also you can do whatever you guys want with the home as well too. So you can renovate as you please, you don't have to worry about asking the landlord because you're the owner. And then overall, some of the disadvantages of renting a home, you never get your return on investment. Your rent could increase, as I mentioned. Sometimes landlords never want to fix anything, so everything just starts breaking, and you don't want to live in that situation. And then overall, it's more on your personal circumstance. So we'll go over with each one of you guys to figure out what you guys want to accomplish.
And I'll share something too. As a team, our mission is to help families build wealth through real estate. If there's a way that you purchase your first home or you currently own a home, our goal is to help you keep that home if you can keep it as a rental. Because long term, I want you to think about it as if the bank is requesting, let's say most people know that the going rate of down payment is 20%. You have leveraged appreciation. You invest, let's say it's $1 million property, and you're investing $200,000, which is 20%. You get the appreciation of the $1 million. So think about that versus the opportunity cost of if you're paying rent and you're paying $3,000, $4,000, there's no gain in that. So each month that we put money in the rent is each month that we're losing out on equity, but also the leveraged appreciation of that $1 million+ purchase, for example. So just something to keep in mind.
Then any questions from the audience? And overall, home ownership is a long-term commitment, so we want to make sure this is something that It might not be a home that you're going to live in forever, but as Wilson mentioned, we want to be able to commit to paying the monthly payments or having your renter in the future pay the monthly payments for you. And just making sure that you guys are paying your bills on time and also just keeping your credit up and being able to maintain the home. Those are just some of the extra parts of home ownership. So the first step of the home buying process is meeting with a real estate agent. Luckily, you have 9 amazing agents out here. Introduce yourself. So, Wesley.
How's it going? I'm Wesley.
My name is Hassan.
I'm Wilson, and if you guys ever think about becoming a real estate agent, feel free to let us know. We would love to help you guys become an agent too.
Hi everyone, I'm Ellie.
I'm Ashley. And there's a couple more.
I'm Candy.
Candy's here.
So we have a great team here to help you wherever you're looking in the Bay Area. We're all licensed in California, so we can even help you down in Los Angeles, Palm Springs. We've gone up to Petaluma as well too. But there's also, if you're looking at investing in other parts, definitely reach out to us and then we can refer you to an agent. I own properties in Texas and Kansas City. Ashley owns properties in Indiana, and we've been helping a lot of people looking in all different states. So if you're looking for someone to, or hear of someone that's looking for a different area, just let us know and we'll find the best agents out there for you.
And to add to that, the reason why sometimes people look out of state is because obviously the barrier to entry to cost is a little bit less. Additionally, we might experience a lot of appreciation here, but the cash flow from a monthly rent that you might get is not going to be as substantial as, let's say, out of state. So that's why even us, we export different areas out of state depending on the growth of the jobs, of population, if there's trends that we see. These are things that we could absolutely talk about too. So. Question? Yep.
I have a question, just kind of a comment based on what you said about expenses being really high. I mean, obviously paying rent is really high in the Bay Area, but one thing that my wife and I did was we rented out our unused bedrooms in our house, which actually, when you take that into account, it made our monthly rent much lower than the average Bay Area prices.
That's awesome.
Thank you, Jess. Hello. That term is called house hacking, and I know my good friend here, Henry, also does some house hacking of his own and doing some Airbnb. So there's a lot of creative ways that you can go about it. There's also a lot of pro building for around the California area for accessory dwelling units, and we're actually going to have another seminar specifically about accessory dwelling units, where it's a granny-in-law or mother-in-law unit that you can rent out, and there's a lot of them out here in the peninsula, and it doesn't succumb to as strict rental restrictions as San Francisco does. So we'll chat with you about some of the options. There's actually a few on market that we know actively that gets $3,000 per month in Airbnb, so that could be half the mortgage or even more that you're paying every single month. So some of the key things to look for a real estate agent is the markets that they're serving, and the key things, let's say, I'm going to call in you, Jeff, again. Like when you were looking for a real estate agent or a team, what were some of the key factors you were aiming for?
Yeah, so I actually worked, full disclosure, with Ashley and Jenny on our most recent home purchase out in the East Bay. But I think the reason I found them was actually because I received a template in the mail from Wilson Young, and the motto was building wealth through real estate, which is very different than finding your perfect home. So I think to me that really resonated, because I think of home buying more of a way to invest and grow wealth, because I can't make enough money at my 9-to-5 job to retire early. So that really resonated with me. So I reached out and I wanted to find agents that, you know, have experience with both first-time home buyers, but with an investor mindset as well.
Thank you. excited to help you find the next one too. And other key factors that people look for are just key communication. So this is our team, and just key communication of being able to be on top of things. And some of the things within our team, we've been able to help people get into homes that are not necessarily listed on the market yet either. So if you're looking on Zillow or Redfin, those are on the market, but because of our relationships with a lot of other agents and being the top agent team in the area, we have access to all the upcoming listings, a good amount of upcoming listings. So we've been able to help people in those circumstances. And then our team, we speak different languages as well too. Hassan speaks Farsi, Wesley speaks Cantonese, Ellie speaks Spanish, Wilson speaks Mandarin and Cantonese, and Assad speaks Farsi as well too. So, and he speaks Farsi. So if you have relatives, I know when I was purchasing my home, my parents don't speak English, so it was really key to have someone who can help communicate with my parents as well in that process. So the next part, I'm going to bring up Assad here. It's talking about the pre-approval process and what you need to do.
Everyone, thank you again for making time to come out here this evening and join us. We really appreciate your time. I know everyone's schedule is busy. Also want to congratulate you in taking the first step towards home ownership. It's a big decision that it's one of the biggest purchases that any one of us can make. And the reason we're here is to help kind of ease your mind, help educate you and walk you through the process, and hopefully be a trusted advisor after tonight as well. So me, I'm Assad Taheri. I'm with U.S. Bank as a wealth management banker. I've been in the business for about 15 years, and I'm fortunate enough to be in a job that I really love, primarily because I get to meet new people every day, and I get to learn about your family, your goals, what you're looking for, and I really enjoy doing that, and hopefully we'll get an opportunity to work together. So going on with the presentation, so the first slide we'll go through is getting pre-approved. So the pre-approval process is not too difficult. There's two ways that we can approach it, which I can get in as little as 20 minutes for you, where we have an informal phone conversation or a face-to-face meeting, and I get an understanding of what your scenario is in terms of like your employment, your assets, your income, and of course your goals, and based on that I can issue you a pre-qualification letter. Something a little bit more in depth than that will be on the next slide we'll go over. That's an underwritten approval. So this next slide is what do lenders consider when qualifying borrowers. So the three first categories that we're looking at: income, debts, and assets. Those are the three areas that they look at, and what they're looking for is ability to repay. So the borrower's ability to repay the mortgage. The income area, what we look for is borrower's employment. We need a 2-year history of employment in the same profession. It doesn't need to be at the same job. As long as you're employed in the same industry, in the same profession, that's acceptable. If somebody has recently graduated and they've just been working for a month or two, that's also acceptable. Your education is continuation as well. And then in terms of qualifying income from your employment, we'll use your base salary, of course. If you have a bonus income component, we can use that. We'll average a 2-year history for bonus. And since we're living in Silicon Valley, a lot of these tech companies offer what's called restricted stock unit income, RSU. And I don't want to brag, but U.S. Bank is one of the best. And in terms of calculating RSU income, we make it very seamless, very easy, and we're able to give you the highest credit for your RSU income. So these things help increase your purchasing power if we're able to include bonus and RSU income. So that's the income component piece of it. Next area is the current debts and credit history. So current debts is essentially whatever's reporting on your credit report. We'll take a look at that, and we take that into consideration, the minimum payment. So credit cards, student loans, car payments, we'll look at those. And of course, your credit history, we look at your credit score. There's 3 credit bureaus that rate everybody: Experian, TransUnion, Equifax, and out of the 3, we'll just look at the middle credit score and evaluate which program is best. Yeah.
Regarding credit, we do come across a fair amount of people that might be looking to improve their credit, so any tips that you can give on that?
Yeah, that's a good conversation to have maybe before we run credit or even after. But if we have that conversation before we run credit and you have an idea of what's going on, I could definitely give some tips on how you can potentially improve your credit score, whether it's lowering your credit card balances, if you have any collections, I can refer you to some people who can help take care of that. So there are certain ways that we can improve it, yeah. And we have some products that are a little bit more flexible on credit versus other products as well. Okay?
Thank you.
Yeah, you're welcome. So we talked about the credit history, credit score, and credit history. One more thing on this category is that some lenders require an extensive credit history besides the credit score itself. They want to see that you have at least 3 credit cards open for at least 12 months. So if you don't have that, then they might ask for you to supplement it with alternative trade lines like insurance payments, cell phone payments, etc. With US Bank, we're a little bit more flexible on that. We just need 1 credit line open for 12 months. So we have some flexibility there as well for you younger people that haven't established credit yet.
I have a question.
Yeah.
So what is the difference between assets and funds when you look at credit?
Oh, the next category? Yeah, I'll transition to that for you right now. Sure, so assets and funds. So when you're purchasing a home, of course, you're coming to the lender because you need us to help finance a certain part of the purchase price. As a buyer, you have to come in with a percentage of that as well. So that's where the assets and funds come into play. So a certain percent of the purchase price, if you have in mind that you want to buy as a down payment, that's where when we talk and I understand your scenario, I can recommend certain products where if you're looking for a low down payment option, we have options as low as 3%. We have 5, 10%, and then of course the norm with some people are that they want to go with 20% down. But there are a lot of options for you on that. So that's the down payment piece. And then besides the down payment, you have to have some, sorry, was there a question?
Oh, yeah, sorry. I
thank
have
you.
one just related to the 3 credit lines. Is
Yeah.
it, if you're buying a home with another person, is it total or is it each person would be like?
Each person, yeah, has to qualify with their income and their credit history and their credit score, yeah. Good question.
Typically, they take the lower of the 2.
Yeah, thank you for bringing that up. So 2 borrowers will say the one has a 760, another has a 720. That's their middle credit scores. We have to base it on the 720 credit score.
Piggyback on that, if
Sure.
you're married and you don't want to purchase with your spouse, can you do that, or do you
Sure.
have to?
Yeah, I have a good amount of clients that do that. Maybe they don't want mortgage reporting on their credit report, possibly because they want to buy an investment property in the future. It makes it a lot easier for them to qualify that way. Because if you have a mortgage and you're buying for another investment property, you have to qualify with your primary residence home as well as the investment loan. So that's a good strategy if you're thinking ahead in the future, yeah.
So true story, so when we purchased our second home, we're in between, so we have our first home and then second home, and we actually use US Bank as a lender, and mortgage wrap basically able to use a lease agreement to verify how much we're able to rent and put that into part of the income. So therefore, we were able to qualify a bigger dollar amount of loan that we want.
Awesome. Thank you for bringing that up.
And maybe Jenny, you can share a little more detail about how you purchased too in terms of your own line of credit from your family.
So, my parents live out in New York, Brooklyn, New York, and they bought their home. They bought a duplex, and then they were able to rent out their duplex and get some. But over time, it built equity. So what they did was they pulled a home equity line of credit, and was able to leverage their home equity line of credit for a down payment, and that was about $400,000 at that time when I was a single borrower and borrowed $470,000 from the bank. So that made up my total income, total amount for my purchase. So my monthly payment ended up being $2,100 or so for my mortgage, and then the interest rate for the home equity line of credit was about $1,500 or so. So when I combined it all, I rented out the other rooms in my house for $1,200 each. It was a 4-bedroom, 2-bath house, and that paid for most of the expenses. So I ended up being able to now cash flow from it since I'm now renting out all the rooms, and it's been able to increase equity of $300K. So now I'm looking at getting a either cash out refinance, because my rate is 3.625, so it's good that rates are lower right now at 3.375, and do a cash out refinance to be able to purchase another home or other investment properties and snowball on that effect. So now currently I do have, with my partner, 22 units across the Bay Area and in the Midwest for rental property income, so we can chat a little more about that. And if rates were higher, then I might look at the option of a home equity credit versus a cash out refi.
Thank you. And Assad, can you touch upon something about like your having a landlord history and how that would affect? I'm obviously speaking for very future, say, if we all own investment property, how long we have to be a landlord for us to consider that income towards, or that's income for future purchases?
Qualifying for the loan? Sure. So what Wilson is referring to, so if you have a primary residence and you just maybe bought a rental property as well, and you don't have a history on your tax returns, from an underwriting perspective, we'll take that history just like 3 months, and you want to go apply, I guess, for another mortgage, a third one. The underwriter won't be able to use the rental income because it's not shown on your tax returns. So to qualify or to use any type of income, it has to be documented, whether it's a W-2 or on your tax return. It can't be just a lease agreement. Nonetheless, what Candy mentioned earlier, it's a departing residence. It gets a little confusing, or if you're moving out of a property. But going to Wilson's example, most banks require 2-year tax returns in order to use rental income. With us, we only actually need 1 year. Yeah, so I'm doing a couple of those transactions right now. My clients just bought the property like middle of last year, and they rushed to file their tax returns like last week, and we're able to use the rental income just based on 1 year tax returns instead of 2 years.
And also, let's say they're targeting an investment, that potential rental income could be used towards the calculation too, is that right?
That one, yeah, that one will be able to be used too. Right.
Nice, thank you.
Yeah, sure. I think the key thing that we're trying to mention right now is just leveraging real estate. You know, a lot of you, I know some of you are first-time home buyers, so you don't have your first property yet, but the sooner you get into it, the sooner you'll be able to build the equity. Your mortgage payments reduce your principal right there as well. So not only is the property appreciating, you're doing principal reduction instead of just paying rent. So you're building equity 2 ways. And you have deductions as well. So you're leveraging it that way. And as the years pass, you build sufficient equity where you can maybe pull some money out and get a second property. If you look at all the wealthy people in history, they've all built wealth through real estate. So just one step at a time, and with the support of their team, we'll be able to get there. Yeah.
Could you talk a bit more about what cash out refinances, and like, are there any properties that are cash flow positive in the Bay Area?
Yeah, we can talk about cash out refi, and then the cash flow positive. Maybe you guys can take that later after the one-on-one or something. So real quick, because I know some of you are first-time home buyers. So cash out refi is for people who already own a home, and they want to leverage, pull out some of that money, remortgage the property. So say, for example, you bought a home, your mortgage is $600,000, and you bought it, let's say, for $800,000, and now the house is worth $1 million. So you have $400,000 equity. So you can pull potentially up to 80% of the value of the house as a new mortgage. So that's $800,000. So $600,000 is a new mortgage, and then you can get $200,000 cash back. And then you can use that cash out for investments, whatever you like. Yeah, part remodeling.
Master's degree, PhD.
To answer your question about the cash flow positive, it's obviously how much you're going to put down for the down payment. But I helped someone out in Oakland buy a 5-bedroom, 4-bath home, and they're renting each room for between $1,200 to $600, and that's going to be cash flow positive for him. So it's going to be more of your circumstance if you are okay with your roommates, or we find a property that might be have a second unit or a duplex or a fourplex. So it really depends on your scenario.
Thank you. Question? I'll keep going. All right. So we talked about pre-approvals earlier, and U.S. Bank does have a unique product. We call it a to-be-determined underwritten approval. So the difference between that and a regular approval is your regular approval comes from your mortgage consultant. You know, we could take our time and collect all your documents, review it, and give you a nice, strong pre-approval letter. But if your conditions aren't, we can't sign off on conditions. We can't clear conditions. Only an underwriter can. So we can provide you that type of approval on a to-be-determined property. So simultaneously, we do our consultation, I collect your documents, do the application, give you a pre-approval letter, and then at the same time, we'll transition your file to an underwriter, where we get you a formal underwritten approval on a to-be-determined property, and that's going to be good for up to 4 months. And the benefit of that is it's going to allow you to compete the best possible way that you can, compete with cash offers. If we do it the right way, you can potentially close in 15 days. 15 days. So when you put your offer in, there's like 20 other offers, and the listing agency is a 15-day closing versus others closing in 20 or 30 days. Your offer is going to stand out. So that's the benefit of doing the underwritten approval for you. And a lot of banks don't offer that because it takes a lot of time away from the underwriters, the processors, the mortgage consultants. We don't get paid on it until the loan closes, so that's why they don't offer that. And then, like I mentioned earlier, we do have the low down payment options. Some cities and counties offer down payment assistance programs. We accept them, but it's up to you as the home buyer to kind of research and find those programs and bring it to us, and we would allow it. So if you can find a low down payment or down payment assistance program for 3%, we have a 97% financing, you can potentially get a home with 0% down.
So you said that the underwritten approval will last for 4 months. So if for some reason I don't find a house that I want to buy in 4 months, do I have to go through the process again?
The reason is that the documents and the credit report expires, because a lot can happen in 4 months, whether it's on credit or employment, bank statements, so that's the reason it expires. So if we have to redo it, yeah, we would have to just recollect the documents again, or we could just move forward with a regular pre-approval letter with the assumption that nothing has changed.
Can you talk about some things not to do?
Yeah, so if you are looking for a home, sure, that's good. Don't apply for any credit, credit cards. Try not to shop for a car because that's going to be a big debt on your history and it's going to affect your debt to income ratio. You can change companies if you like, just let me know. I've had customers change in the middle of the process, and all we need is like a new employment offer letter. Some banks don't allow that, so only do that if you work with me. Yeah, so those are some of the things you shouldn't do.
Thank you.
Yeah, thanks. Gift funds are allowed as well with us. So gift funds from family only. It could be a distant cousin, in-law, parent, sibling. So if you don't have all the money for the down payment, you can get a gift from family.
Did they still do the take the first home for like the
Yeah. Yeah, from your 401k, you can do it's a loan, so you work with it with whoever's holding your 401k, and the general rule is that you can take 50% of the balance as a loan, up to a maximum of $50,000.
Question. So do you guys care if the gift fund actually sit in the bank for less than 2 months? 2 months or 3 months? I know some banks actually care for that.
Yeah, good question. So she brings up kind of like large deposits and seasoning into your bank account. So, the down payment and the reserves and the closing costs, we need to see it in your bank account. So we need 2 months bank statements. And if there's any large deposits in there outside of your regular salary, we need those explained. So we only look at 2-month history.
That's considered a large deposit.
So typically it's anything that's more than 25% of your gross salary. So if you make $10,000 a month, anything more than $2,500. And then we just need it explained. It doesn't mean that it's an issue, just we need it explained. And another nice thing about US Bank is that we allow backing out of assets. Some other banks don't. So let's say if you have a $10,000 deposit in your bank account, maybe it's cash or you can't source it. Some banks, it could potentially cause that to be a debt deal, but with us, we can just back that out. Like we won't count that money, and then we can still, move forward with the other assets.
I have some different questions. So, I finally bought a house, but my name was added last minute. Do I still able to apply for the first-time home buyer or no?
First-time home buyer, in terms of tax credit?
In terms of rate, yes.
Interest rate.
Deducting interest? Yeah. Yeah, I mean, definitely consult your accountant, but anyone can deduct the interest. I think you don't even have to be on the loan. If somebody else is making the payments, that person could even deduct the interest, but double check with your accountant.
And I think his question is also like if you can qualify for like the 5% FHA programs.
Okay. Is that more for a little down payment if you can qualify?
Yeah.
Yeah. So you don't need to really be a first-time home buyer to qualify for those programs for 3%, 5% down. It just needs to be your primary residence. So you have to be moving into that property. Investment properties require a little bit larger down payment because banks look at it as more riskier. So typically, depending on your purchase price or the loan size, you need anywhere from 20 to 25% down payment for an investment property. Cool. Yeah.
Yeah, let's say I have 3 other friends who are trying to chip in for an investment property. What would you say is the best plan for it? Like LLC or Contingency?
I've seen that done before, yeah. Where LLC, like you said, I've seen friends or partners develop an LLC for the sole purpose of buying the house. And they do it together and they put the property into that. So that I've seen it done before. That's a good option.
And so basically, would the bank allow us to take a business loan from that, or how does it work? Do we take out 4 personal loans together and then?
It would be like personal loan under your names, and then you would hold title under the LLC.
Okay.
Yeah, so like the vesting, the title would be under that. But the loan itself would be under your personal names.
Got it.
And I think to your question too, some things to think about is the agreement that you have with the 4 friends, or another way of saying it is a disagreement. What happens when there's a disagreement? Let's say one of the people want out of the property or the LLC, how do they cash out? How long the term is? Probably some things that you could ask someone legal.
Got it.
So going back to the question on the 401k loan,
Sure.
will U.S. Bank take that new loan that you're taking out as a down payment towards the debt to income calculation?
No. So just to reiterate, so his question was if you take a 401k loan, you're going to have monthly payments on that loan. Will we include that monthly payment as part of the debt to income ratio? And the answer is no. So it won't affect your purchasing power. Any other questions?
One right here.
Yeah, sorry, I can like you may have answered it already. So I want to know what's like the requirement for the loan. Let's say we're doing a 4-person loan. Yeah, you need to look at W-2 tax returns for the last 2 years.
Exactly. That's pretty standard no matter, if it's a first-time home buyer investment or whatnot. Yeah, it'll be 2 years W-2s and
what about, let's say, my friend is on a cash basis for the last 2 years, and he's not reporting, but he's got the collateral, like he's got another house, for example. Would you use that as like a?
Unfortunately,
Okay. Gotcha.
and we have to have the ability to repay, so there has to be a good income source, and we have to, the debt to income ratio is, the key thing is the ability to repay.
Gotcha.
And we'll definitely talk more if you'd like afterwards.
Okay.
I think the next slide also has a calculator, maybe that can help a lot of
Yeah,
people
sure.
show them how to do it. Jay, that link actually goes to the Zillow website.
Just exit. Exit and it's in there.
So a lot of people might, before starting to talk to a lender, you might want to figure out a rough basis of how much you can afford first.
I'm going to zoom in so you guys can see a little bit better.
So what you can do is use our friendly person in Google and search Zillow, how much house can I afford? And then it's this first calculator here. So this is based off of your income. So let's say you're making, you and your partner are, maybe you can leverage your parents as a co-signer, how much income you're making together. So let's say you're making $150,000 together. And then let's say you have some student loans or car payments and all that, so that's about $250 that you have. And then the down payment that you have is about $200,000 for your down payment. The max debt to income ratio that most banks will have is 45%, and then for US banks, it goes up to 50%.
We have some programs to 50, yeah.
That depends on, of course, what the program is. So the max, we'll say, is 45%. They keep it at 36% just to offset a bit of it. And you mentioned the interest rates right now are 3.375%. And the loan term is, if it's a 30-year fixed mortgage, it'll be 360 months, including property taxes and insurance. Property tax in San Mateo County is roughly about 1.1 to 1.2% of your purchase price. So $1 million, it'll be about $12,000, $1,000 per month. And home insurance is $800 per year. So I know US Bank does certain programs. If you do less than 20% down, maybe 10 to 20% down, there is no PMI. PMI is private mortgage insurance. So it's if you have less than 20%, then you have to pay that insurance. But Assad has great programs where you do 10% up to certain loan limits that you don't have to pay that. So we're going to take out PMI. And let's say we're looking at a property that has some HOA. What's the HOA? So what the max house, if you're making about $150,000, you can afford up to $1.05 million with a 200K down. And your monthly payment will be $5,125. This is, sometimes it readjusts, like an amortization. So your first few years, it's mostly going to be interest, and then the last 30 years is going to be more towards principal. So let's say a lot of loans is towards interest, you can deduct that because this loan is around 750, let's say 750 to 800,000. The mortgage you can deduct from your property taxes. So that's one of the benefits. Then your property taxes, you can deduct up to $10,000 per year for that. And then you have insurance and then HOA. So your monthly payment with a home of $1,050,000 will be roughly about $5,000.
Two questions. You said the big one, you said that's for a 30-year fix?
Yes.
Secondly, for first-time home buyers now, would you recommend sticking to something like a 30-year fix or a 15-year home?
Yeah, I get that question all the time, especially between an ARM and a 30-year. I mean, statistically, most people keep a house, they say like maybe 7 to 10 years, and then they'll upgrade. So if you can potentially foresee yourself upgrading and keeping this one, it gets tricky. So if you foresee yourself upgrading and maybe selling this, then the ARM product. But if you see yourself upgrading and keeping this as a rental, then the 30-year fixed.
I guess maybe the question would more be like in terms of cost savings.
Cost savings, the ARM will be lower interest rate. That's right now like around 2.5% on a 7-year ARM. So the 7-year ARM, just to let you guys know, the rate is fixed for the first 7 years. And then after that, it'll adjust once a year. And the payments are still spread over 30 years. There's caps on it as well. But for the first 7 years, the rate is fixed.
Did you refinance within the 7 years?
Yeah, there's no prepayment penalty.
So you could switch to a 30-year fix?
You could, yeah. It's just you don't know where rates will be tomorrow.
So to give you an example of when you're getting an ARM versus a 30-year fixed, interest rate's 2.5. So your qualification before was $1,050,000, so now you can qualify for a bit more at $1.13 million. And depending on your situation, if you want to rent it out in the future, our goal is to help you build wealth through real estate. So ideally to rent it out and build passive income from that. But if it doesn't make sense, if let's say your first home is a condo with some HOAs and you don't want to pay HOA anymore down the road, then we would recommend getting a adjustable rate mortgage.
A little bit further on the 711 ARN. I mean, yeah, I understand that it's like you can't really predict the future, but we can probably say the recession is going to happen within some time within the next 7 years. It probably makes sense to do a 7-1 right now and then refinance after the recession comes, right?
Well, I mean, the rates have been low for so long. That's the only thing, right? Rates have been low.
But like the chart earlier shows, historically, it's always been going down except for the last couple of years, right?
Yeah. So, I mean, most likely in the future, rates will be higher, 5 to 7 years from now. I don't know, that's just my thinking. So if you think you're going to be in the property long term, then personally, I would probably do a 30-year. But if your situation, everybody is unique, if you know you're going to sell and you don't want HOA dues, then go with the 7-year ARM, yeah.
Yeah, something to think about too is, let's say the recession does come, let's say there's a hit to prices, the refinance is going to be based on the new price of the house. So it's going to be reappraised. So it might be hard to qualify, depending on your loan to value at that time. Also, we talked about HOAs. Some HOAs, they might have restrictions on rentals. So if you do decide to keep the condo, we just have to make sure that there's no restrictions on that. So that's something that we would look into. Let's say you're looking to purchase a first condo or an investment, then you have to make sure that there's no restrictions.
So one question, just let's say for a 30-year interest rate is like 3.0. So if let's say a primary residence versus an investment home, so what's the like average difference you'll probably get for the interest rate?
There's a lot of factors that
You
play
have to
into
say
what
for
the
the
rate on the
same
investment
couple,
is.
like everything's the same, and then if you're getting the same price for a rental versus a residence.
The rental could probably, depending again, because the loan amount determines the investment property rate, that affects it a lot, and loan to value, but roughly maybe anywhere from like 3/4 to 1% higher on an investment.
Wow.
Yeah.
That's a lot.
Yeah.
It's a big difference.
Just, I guess as an example for you, I have one scenario right now, a client is buying an investment property for around $400,000. I quoted him a 30-year with 25% down payment at 4.375.
I just got quoted the same for investment, right? So,
There you go.
yeah, it was like 4.4 for the investment property.
And then some people use the strategies, double check with your accountant, but creating that investment property as a second home, and being a second home could qualify more so as if you live in it, if you want an Airbnb or do a short-term rental for that investment property, when you live in it for a certain amount of time during the year, then you can get a lower rate, probably in between.
The second homes are very close to primary residence, so it just has to make sense. It has to be in an area that could be considered, second homes are usually vacation home, so it has to be an area that would be considered that it can't be too close to your primary. So maybe like Lake Tahoe, Southern California, I don't know, something like that.
Good information.
And any other questions on lending?
If you can just talk about the settlement fees, like besides the mortgage down payment.
Closing costs? Sure. So you have your down payment that you need to have assets for. The other thing you need is reserves. That's like an emergency fund. So every bank requires that in case something happens with your employment. They want to see you have a cushion that you can fall back on. And the amount varies depending on your loan program and your loan amount. We have some programs that require no reserves, and then we have some as 6 months reserves or 12 months reserves. And what that means is that whatever your full housing payment is, so let's say your full housing payment with mortgage, taxes, insurance is $4,000 a month. If you need 6 months, then we need $24,000 in reserves as a cushion. And then the last thing was the closing costs. So the closing costs varies depending on where you're buying, your city and your county, because each city and county has different rules on what the transfer taxes are and their settlement fees, but just a rough estimate on closing costs is maybe anywhere from like $6,000 to $8,000. That includes, your escrow title fees, which I don't know if you guys will get into that later. We can talk about it one-on-one. Appraisal fee, prepaid interest, things of that nature. But you're thinking about $6,000 to $8,000 for closing costs.
For the reserves, does that need to be in cash or can it be invested?
Yeah, it could be stocks, or 401k.
The cash value, life insurance as well too.
Yeah, if it's cash value, life insurance, it can't be like real estate or cash at home.
Is there a difference between liquid and non-liquid reserves, where non-liquid reserves you guys only give a portion?
Yeah, so non-liquid is like your retirement accounts, your stocks, so we can use 70% of the value.
Now the fun part is now that we've gotten pre-approved, underwritten pre-approved, which is we were able to write a stronger offer. It's a search for homes, which Ashley is our dedicated fund showing assistant, and she's our partner here, so she'll talk a little more about the process of finding a home.
Like she said, the fun part. So just to get, this is going to be a little more interactive. So what are you guys looking for in a house? What's important to you guys?
A yard.
What is that?
A yard.
A yard. Why would you want a yard, Wilson?
For 2 pups.
For 2 pups, exactly.
Island kitchen.
Oh, looking for that big kitchen? You a big chef?
Sometimes.
Yeah, chef's kitchen, that's, you know. And then the yard, what else are we looking for in a house?
Parking.
The environment, the neighborhood,
Good plumbing.
plumbing. Good plumbing. Yes, the water pressure, right? The water pressure, yes, absolutely.
Parking.
Parking, yeah. It's a big one for people who have to live in San Francisco right now.
No cemeteries.
Yeah. Yes.
Yes.
No cemeteries. Quiet neighbors, quiet neighborhoods. Safe neighborhoods. Anyone here have kids?
Needs a bomb shelter.
Schools?
No death on property.
No death on property.
Not a previous row house. No additional holes in walls, please.
So aesthetically pleasing.
Aesthetics,
Another big one for people is they're deciding between whether they want a condo or a townhome or a single family home. And I think Jenny and Assad have kind of shared a little bit about what the difference is. But a condo and a townhome, you're gonna have an HOA with those. An HOA is gonna typically cover the exterior maintenance, landscaping. Sometimes it'll include the roof. Sometimes there'll be amenities like a pool or a gym and things like that. Every community has a different price point, and every community is going to have a different thing that it covers. So when you are doing your search and you're looking at those things, you're going to want to take that into consideration as well, and that'll affect your price point, which Jenny was showing with the Zillow calculator. And I think, if you want to click the next slide, let's see if we got everything. So condo, townhome, single family. Your family also is like where they work, commute. That's a big one for people going into location. Some people want to live downtown. They need to take the BART. So those are things that school, the size, if you're a big family or looking to just get started, you might go into the smaller one. I think we dove a lot into feng shui. A lot of that's the no cemeteries, toilets facing certain directions. We've had a stove and a faucet.
Front door
all those
seeing the
types of
back
things.
door.
Yeah,
That's one.
something with the back door. Yeah, so we're familiar
gotcha.
with all of those. And then we got into transportation and backyard. So something to take into consideration is these are the top things that everyone are looking for. So you have to take that into consideration when we're thinking about the competition. So that's also why you see maybe on Redfin when you are searching that it becomes a hot home. So when it becomes a hot home, it's likely that you're up against a bunch of competition, and that's why you're going to want to have people like our team there to have a conversation with the agent to find out, is everyone just clicking on that house, or are people actually pulling disclosures and finding out, are people really interested in submitting an offer, or is this just a popular house because they price it really low? And so that's why you have us here, and we've got your back.
Ashley has a point, because when I get a listing and it's on the market, I click the like button for my own listing, so. It increases the Redfin estimate, so. Actually, we got 13 people do that.
As a buyer, don't like the home, just remember the address, so to go against Wilson.
Yes, yes. Write down the address and send it to your agent,
Don't go to
and then
that
we can do the research. Exactly. Don't share it with all your friends, because then they'll all click on it too.
A lot of views, the view count goes up too.
It's the view count that makes it a hot home. It has nothing to do with how many people drop by the house. So those are some things to take into consideration. And so these are the tools that we recommend using. So when you work with Wilson Leung team and anyone on our team, we're going to set you up on Real Scout, which we're going to put in all the parameters that we sit down and talk about. That's why it's really important for us to sit down and really get to know you one-on-one versus just you saying, I want a single-family house in Westboro and I can afford 1.2. There's other factors, size, bedroom count, also those feng shui and certain things like that that you're going to want to sit down and really share with your agent. And the reason we use some of these other tools is Trulia is a popular one for crime maps. If you want to see kind of what the neighborhood is, they have percentages on Trulia to give you some background on maybe the neighborhood if you're not as familiar. Redfin is really popular. They just added the coming soon, but Redfin's more popular for their estimates, and it's a great tool in that sense that a lot of people check that out. And Realtor.com and Zillow are pretty connected when it comes to rentals and coming soons and things like that. Zillow is probably one of the most popular ones when it comes to rental properties, finding out how much you could rent that home for. So they'll give you kind of what that rental market is looking like on that property if you're looking at investments. Any questions about any of the tools or any other ones that you guys have heard of or use?
Can you talk about off-market properties?
That's a great question, and that is our next slide. So who here has met Wilson door knocking? Has Wilson been out in your neighborhood, knocking on your door, giving out flyers, or Jenny, or any of us? This is me out door knocking. So one of the ways that we've built a community and met so many people is door knocking. And so what that's done is Jenny has a story where she's met an off-market opportunity, which is a seller who's maybe thinking about selling but doesn't want to go through the whole open house, putting a sign in their yard, having people come through their property. So they might reach out to an agent such as Jenny and say, hey, if you bring me a buyer, I'll sell at this price. And I think Jenny had that very example just while being in a neighborhood and dropping off keys to another client. A seller just happened to be like, oh, how much did you end up selling that house for? Oh, I sell my house for that. Do you have a buyer? And Jenny did. And so those are opportunities when you work with a team like Wilson Leung that we can bring those opportunities to you. So that's why it's also really important to share what you're looking for with us. We're also part of the top agent network, the top 10% agents in the Bay Area. We're part of that network where we share our coming soon and our off markets. And then the MLS is where all the properties are posted. Sometimes they get filtered out for whatever reason and don't make it onto Redfin or Zillow because someone might have put in the wrong data or algorithm, and they might be an out-of-area agent and accidentally posted it in the East Bay MLS. And so that's why you want an agent that's going to be looking out for those things for you. Kind of touch on off markets. Agent relationships we are good friends with multiple agents in the area, so we'll call them up and say, hey, we've got a client that's looking in this area. Do you have any coming soon? Whenever we offer on a property, we ask the agent, do you have any other properties similar to this? So we're going to build that relationship and constantly be out there looking for your next home. And through our brokerage, we do the same through Own Real Estate Inside. And then door knocking, we've met a good amount of sellers that way as well. Any questions about the home search and things that you need to look for?
One more good website if you guys are looking, like in South City, there's like multiple pocket neighborhoods. There's a website called neighborhoods.com. If you go there, it'll be like what people are saying, what are the schools, what are the shopping centers, a lot of things that you can find out about that specific neighborhood if you're contemplating between which one you're leaning towards. It's a good website to kind of get some insight on.
Yeah. And so whenever you're out there looking at a house, going to open houses, we recommend just ranking it. Just general 0 to 10. If it's a 5 to a 6, it's likely not that house for you. Let us know though, so that we can figure out what was it that you didn't like about that house, so that we can maybe adjust your search a little bit and identify the right house for you. If it's a 7, 8, or 9, that's when you're going to want to have that conversation with your agent about submitting an offer and next steps. That's when you're going to go over disclosure packages, which I know we don't shared a little bit, and we're going to go into disclosures a little bit more. So once that house is in 7, 8, or 9, we're going to jump into the next step with Wesley and Hassam, which is submitting an offer.
Nice. I would like to add something to that too. During your search, you're going to visit open houses. What we'd like to do is we're very responsive. If you're working with one of our agents, send us the address. And before you go out and tour on Saturday, Sunday, or let's say Friday, the reason why is we'll get you information on comparables, disclosures, any material defects that we know. If there's anything in the private remarks that the agent mentioned, we're going to give that notice to you too, so you are aware on the first time you're there. So you don't waste any time. Once you're there, you know every little thing about the house. And thank you, Ashley.
Thanks, Ashley. All right, guys, everyone get up.
Please.
Real quick. Get up, get up.
Please.
It's a sugar and food. We're going to do a quick icebreaker. Everyone's going to look to someone they don't know, give them a high five and say, yes, woo! All right. We're good. Thank you. Sorry, our team brings a lot of energy, so we have to little office atmosphere in action. Everyone good on their seats, on beverages? Everyone's good? Great. My name is Hassam. I'm the one that's fluent in Farsi. And this is Wesley. And we're going to talk about making an offer. You guys know about the market now. You guys know what it takes to get pre-approved with our wonderful lender, Assad. And now we're going to talk about how to bring all that together and actually do the funnest part of your home search and putting in offers on that dream home. I'm going to let Wesley take away with number, myself? Okay. So there's a few parts that kind of go into this. There's the purchase price down payment. There's what we call the EMD, which is your earnest money deposit and proof of funds. We're going to talk about contingencies, and then my favorite part, which I'll go over also, is the love letter. And we'll talk about what that means. Purchase price and down payment. How to know what to offer. So this specific portion is going to be more of a strategic approach. What we do is we kind of sit down and pull a range of comparables, what I like to call the 555. And what that is 5 homes that have sold, 5 homes that are pending, and 5 homes that are coming soon. And what we do is we kind of take an aggregate and create a range and let you guys know transparently where might this house fall on offer price. And the comparables that we look at, we're really honing in with the agent. That listing agent is saying, hey, what are the expectations? Where should we land? What is this seller expecting? These are the tough questions that we really dive into on your behalf to get that confidence that we know, like, okay, we feel confident going at this price will get you where you need to land. So the heavy duty on that, the heavy lifting on that part will be done by us as your agents. But we'll translate that to you guys and say, okay, we see houses flying from 1 million up until 1.2. Now, if we really want to be competitive, we know they have 5 offers. And to go in and be competitive against the 5 offers, we would need to land closer to this as an entry offer point. Now, those numbers can be anywhere from, can range, but as long as we're sitting down and going over the comparables and seeing what the price points may be, we'll work together to get you where you need to land to kind of hopefully be getting your offer considered. Does the comparables make sense? Does, what has sold, what's coming, does that all kind of make sense to you guys? Any questions there?
What was the 5 rule again?
It's so 5 solds. Basically, these 5 homes have sold. We see these 5 homes are pending. We'll be able to pull some information on what they're pending at, and then 5 coming soon. What are these houses being listed at? If we can kind of take a range and see what those are all at, then we can feel confident saying, okay, maybe this home will be good entry point, will be this price point. Down payment portion, Assad talked about this. We've kind of went over this a couple times, but traditionally it would be around 20%. down payment is a market average. There are programs that you can talk to us on about that can bring a down payment down if you would like to, depending on where you are individually. But we do see a norm around 20% as an entry point, given where you stand with your offer. And that's pretty much that slide. I'm going to pass it to Wesley, and he'll go over pre-approvals and proof of funds.
Yeah, so proof of funds actually kind of ties into what Hassan just talked about. So proof of funds are any bank statements, retirement funds, stock options that reflect your down payment. For example, if you're looking at a 20% down payment, like Hassan mentioned, then it's anything that totals that lump sum. And the reason that's important is because that actually gets packaged in with your offer and submitted to the sellers. That will go along with your pre-approval. So these are the two main documents that we need, aside from the contract, to be submitted with your offer. And this is the pre-approval that Assad will send out once you've submitted all your documentations and you know you're purchasing the home. And so the next portion that we're going to dive into is contingencies. And contingencies are essentially conditions to your offer. And these conditions can be almost as important as your purchase price. So as much as we look at comparables, we look at what the sellers are looking for, we also want to protect you as the buyer. And contingencies is basically there to protect three different things. The first one is going to be a financing contingency, which essentially is your loan. The second, an appraisal, and the third, an inspection. And the purpose of these is to essentially have certain conditions met before proceeding with your offer, before moving forward. And what this ties into is also going to the next slide, but the deposit. Okay, so they all kind of tie together. But essentially, the three contingencies that we're going to look at are inspection, loan, and appraisal. Okay, the first one, the inspection contingency, is essentially, let's say the seller has a few things in the house that are looking a little old or perhaps a little damaged. The inspection is something that you would hire a third-party person to come out and take a look at the property, whether it's electrical, plumbing, roofing, all that kind of stuff, and issue you a report. And once we have that report, you can decide, well, based off of what's shown here, the list of repairs on there, how do we want to proceed? Do we want to negotiate repairs? Do we want to just take care of it all ourselves? Or, everything looks good, let's just move forward and remove those contingencies. Any questions on the home inspection? Or what it entails?
I would point out that a lot of times when we get what's called disclosure packet, if you say, hey, Hassan, Wesley, you like this home?
Yep.
We pull disclosure packet, and about 90 to 95% of the time, the sellers provided an inspection report to us, which we will review with you guys. After reviewing that, if you still feel like you don't feel confident in what this home is presenting, we can go forward with getting our own inspectors out there, like Wesley mentioned, bring somebody out. But we will have at least something that you guys can look at that shows you what the condition of the home is.
It's going to be
Oh yeah, I've heard that in the Bay Area, at least, it's been very common for the buyer to wait contingencies.
Very common, yeah. I would say maybe at this time, maybe 60% of offers are going to be non-contingent. And it's definitely a risk because you are essentially taking the home completely as is, no matter what the condition is, no matter what happens with your loan. But given how competitive this market, we're competing with 5 offers, 10 offers, one of the things, does make a big difference. And the way to see it on the flip side is if you're a seller and you have 10 offers and you have 2 offers at the same price, both at $1 million. But one of them you have to jump through a few hurdles before moving forward with the offer, whereas the other one has waived all contingencies, says let's do it, then they're likely going to choose something that's a little bit more surefire for them. Does that make sense? Yeah. But like one thing that we're going to do is we would advise on a case-by-case basis. Every person's going to be a little different. Every house is going to be a little different. As far as waiving all contingencies or multiple contingencies, that's something you'll sit down with your agent to kind of discuss.
In terms of the financing contingency, when I talked about the to be determined underwritten approval, if we get that for you and if you can plan ahead of time, get all the documents, get you to be determined underwritten approval, we could put you in position to waive your financing contingency.
Yeah, speaking on that, I just had one of my buyers go in a contract that is working with Assad on his loan, and before we placed the offer, we had that fully underwritten approval that Assad provided, and we were able to waive that contingency going in. And the most important thing that you need to notate is when we go in without a loan contingency for a seller, it gives them the confidence that you as a buyer can execute financially. We want to give them that peace of mind that if they're going to go in a contract with you, that they're going to purchasing your home, halfway through, something's not going to pop up financially, that is going to scare them from not executing on that. So the loan contingency definitely on the sell side is very, very important to have that confidence that you can execute.
And so the last contingency is the appraisal contingency. So essentially, does anyone here know what an appraisal is? Or yeah, okay. So some of you guys do. For those that don't, it's basically, the best way to think of it is the bank wants to know how much a property is worth from day one. So basically what they're going to do is they're going to send a third-party person out to, one, look at the same data that we look at, which is comparables, but two, to also look at the physical condition of the home, the location, what's surrounding the area, any updates to the property, remodels, factor that all in to get the value that they provide back to the bank. And the bank always wants to know essentially what the home is worth. And if there is a gap as far as your purchase price versus the value, that is where your contingency comes in, where you're able to renegotiate the price or withdraw from the contract without any sort of penalty. Does that make sense?
Maybe you can give a scenario about not appraising. What happens when that happens?
So let's say there's a house down the street, we offered $1 million, but the appraiser come out, took a look at the property, took a look at the data, and it was only worth about $99. So it's about a $10,000 difference. And what that means for you as a buyer is that you have your down payment up, you have the $10,000 difference. That $10,000 will actually get added on top of your down payment at closing. So you are going to have to pull that money out of pocket. So one thing that you will definitely have to do when you sit down with your agent is look at the comparables, because that is going to give the best source of data to see whether or not the home is going to appraise.
Yeah, we don't want to throw you into a crash here.
Yeah.
But what we do is we really hone in and drill listing agents to really put us in a position that we know, okay, we look at comparables, we know what you're telling us, we shouldn't really have that issue. So we do that legwork for you guys to make sure that you have that price point that we can appraise.
Any questions on contingencies?
Okay, so fourth is love letter. There's a board over here. It's kind of hard for you to see, and I don't want to move it, it might fall apart. But there's 3 examples of love letters we put out here that you guys can read. These are all actual buyers of ours. This is the buyer that just got on a contract that I'm working with Assad. That's the letter that we used for the home we bought in San Francisco, and a few previous clients as well. And the love letter is very important. For some people, it's a surprise, or they're kind of like uncomfortable. Like, why would I put a picture of me, my baby, my dog on this piece of paper that I'm giving to someone that I don't even know? But it's exactly for that reason, so they get to know you. We deal with a lot of investors in the Bay Area, and we deal with a lot of personal buyers like yourself. So you might be investors, maybe not. If you're buying your first home for yourself, for your family, for your kids, for your dogs, whatever that might be, we want them to know that you are real, that you are actually human. I'll tell you why. There's a lot of situations where we go into an offer process where there is an offer that is the same price, you both are at $1 million, and one has no letter and one has a letter. That house, that offer that has a letter on it, and the seller can actually see, okay, you're human, and they've been living in that home for about 40 to 50 years, they want to pass this to another human to build their own memories. If for any reason there's an offer that might not have a letter on it, the first thing as a seller you would think is, this is probably an investor. If I want an investor to come into my neighborhood that I've been here for 40 years, take my house, flip it, and rent it out to someone that's going to have no culture or ties to this community, probably not. Or much rather give it to Nod, his girlfriend, and her dog to come here and take over this home and build their own memories themselves. So I personally, and my teammates can vouch for this as well, I personally won 2 offers within the last probably 6 to 8 months because of my letter. The listing agent has literally come back to me and said, the sellers have looked at all the offers, they love your letter, and they want to just solo counter you. They're not taking into consideration any of the offers because they love your family, they love the kids, and we want to work with you. And what we do is we don't just tell you to put a letter out there, we met at our Starbucks and now we're in love. It's more so, at this point you've walked through the home, so you're going to highlight things that matter in that home. I can imagine myself, my kid having a 3rd bedroom. This kitchen is going to be great for our pasta dinners. Like things like that the seller's like, oh wow, you actually came to my house, you're envisioning yourself living here. They know you have been there, you've done the legwork, and it makes them more confident. Yes?
Can you talk about the love letter on North Press, please?
The love letter on North Press.
The stove?
Oh yeah. So we had a listing recently in Terra Bay in South San Francisco, and Wesley's buyer actually came, they toured the home probably like 3-4 times, and there was a picture that the mom took of the kid actually, like, it was like this tall, touching 1.5, touching the buttons on the stove. And they took that picture, they used that picture in the letter, and they're like, we can't wait for our kid to cook in this kitchen. Ooh. There's just like a little bit of an emotional tie that as a listing agent, I'd be like, oh my God, this is, you guys should probably work this family, you know? So it's like, you never know what that agent's feeling that day, that time, that moment, but it can have a dramatic effect on your offer being viewed, considered, or even rejected. We don't know. But definitely, once you get into a relationship with one of us, we will definitely send you templates, we'll coach you through that, we'll walk you through the letter, how to couple that with everything else we showed you today. We'll create that A1 package that's just like you put it in front of them, throw up a Hail Mary, hopefully it works out. Any questions?
Yeah, I guess how do you position yourself in a letter like this, for example, the whole having dog thing, right?
What was that?
How do you position yourself in terms of letter, like for example, having a dog, right? You might say, hey, this home is great for me because I have a dog, I love a backyard, etc. But from the home buyer's perspective, whether they think that's cute or they think, you might ruin the home that I cared about or whatever, like how do you position
I wouldn't really think of it as the seller worrying about the condition of the home once we're selling it. As a seller's perspective, because we do a lot of sellers too, they're looking to net the most and the quickest amount of time. If they do see that they're actually passing it forward to a family that can create their own memories, that's pretty much the extent of it. I wouldn't really hone in on maybe it's a negative, maybe this and that. You're just putting your best foot forward to present yourself to them so they know who you are and hoping for the best. Yeah.
Would you only write this if it was a home you were planning to live in? Like, if you're planning to invest in a property, would you still recommend people write a love letter?
It's a great question. There's pros and cons, of course, but at the end of the day, you're looking to compete against potential investors. To put your best foot forward, to present it in a light that this is going to be a home that I'm purchasing either for a short-term investment or long-term, I'm going to move it down the line. At the end of the day, it's an introduction to the seller so they know that you have toured the home and you have interest in purchasing their home. You're putting your best foot forward. We want to put you in a position to win the first time. If there's a little bit of a tie to that home, they see that, it can maybe put you above other offers.
I can add context to that question too. So there's 2 types of properties you're going to walk into when you're touring, an occupied one and a vacant one. If it's occupied or if it's vacant, it might just mean that the owner just moved out for the purpose of the sale. So it's going to be up to your agent to figure out who owns it, how long they've owned it, are they an investor and only care about the bottom line, or are they a previous homeowner that lived there for 20 years, had a hard time moving out, however they had to do it because they had to move out of state, for example. If we find out information about who they are, let's say we have their name on tax records, or if it's an occupied property and you see a leash in the house, in the garage, we'll take note of these things so that we can cater a personal letter so that it's a match in terms of being empathetic to that person. If they have baby shoes or if there's like a baby crib or whatever it is, that's also going to go into personal letter or our approach when we have a conversation. Oh, I noticed that the seller, it seems like in this bedroom it was for the baby. Well, I'm so excited to present my offer because they also have a baby coming up. And then they already are planning all the purchases for that baby and they see themselves in this house. So things like that will definitely take into consideration. As white and black as financing is, as the touring is, as disclosures, plus or minus, termite inspection, all this stuff, it's an emotional decision. Even in the boardroom at a corporate level, it's one person shaking the person's hand to make that deal happen, even if it's millions or billions of dollars. And we have to feel comfortable working with that person. So we'll make sure that's our job to make sure our relationship is strong.
The listing agent sometimes throws the phone too, where he's like, hey, Sam, tell us a little bit about your car. We just know, okay, good, all right. So, any other questions around the complete offer package or any section that will be not covered? Next section, negotiations and contract. Wilson and I will go through this and we'll play this. After you've made an offer, they call back, your agent calls you, and they say, hey, Wilson, congratulations, our seller wants to work with you. But they're requesting X, Y, and Z. We will kind of go into the negotiation stage and we'll take a lead here and we'll go from there.
Yeah, so I'm the primary listing agent on the team, and I get a lot of solicitation calls from buyer's agents because it's a competitive market, there's a lack of inventory, so I've seen many things.
I try to avoid conversations with agents because it takes a lot of time. And rather, I just want to look at the fine print. What's on the contract, what's on the terms. If there's a personal letter, I'll attach it and I'll share it with the seller and I'll package it all in a Google Drive and they will take the opportunity to look at it. When it comes to reviewing offers, we make sure we look at the big bullet points, the price, the contingencies they mentioned, how fast they can wire it at EMD. If the seller wants a rent back, are they providing a rent back? Have they already considered that if I put it in that private remarks? And the most important thing that if you're looking for a buyer's agent that's working for you, they have to be prepared to be growth. Because if the fiduciary for me as a listing agent is to make sure I understand the buyer and the buyer's agent, I'm gonna ask some tough questions, right? If I'm qualifying what's on paper, it might look really good, but anyone could write any price or any terms. So my job is to make sure that I take the time to call the agent and to call the lender. So some of the questions, and we could role play this, but some of the questions that I ask is, can you tell me how long you've been working with your buyer? If I hear any hesitation or it's my first offer, I'm writing with my buyer, or I just met them at this open house, I'm a Redfin agent, I showed this one property, I'm ready to write the offer, I'm gonna know they don't have an established relationship. Why does that matter? An established relationship, if Hassan has written 3 offers for a previous client, and this is their 4th, they have some previous experience to know what it's gonna take. Versus if it's their first offer and they write it and we accept, there's gonna have to be some fear of loss that's gonna be in the buyer's mind. They don't offer too much. It's kind of like you write me an offer, I'm the seller, I say, I'll take it. You feel like you left some money that you shouldn't have because you paid too much. So in this respect, I asked the agent, how long have you been working together? Can you talk to me about any specific terms that you have that might be out of the ordinary? So for example, if the listing side provided inspections and you have a 5-day inspection contingency, to the seller that looks like a risk. So why do you have a 5-day contingency if I've already provided disclosures? Unless there's something very specific on the disclosures that you have concern for, your agent needs to be very specific about this is the reason why we have a 5-day contingency. If he chokes on that, then I'm going to know they probably don't have a good relationship, or the agent is really new and he wasn't able to talk to the buyer about having or not having a contingency. So these are things that I pick up on, and these are things that I don't know if every listing agent picks up on or does due diligence. Also, I ask the agent, hey look, let's say offers are due at 1 p.m. I meet with the seller at 3, and I call Hassan, who's the buyer's agent, at 3 p.m. And I say, hey Hassan, great offer, I appreciate what you did, nice personal letter, the terms are clean, the offer's clean, I just don't know we have multiple in hand, and I'm meeting the seller at 5, can you tell me if your client can come up higher? Probably not. So depending on what he says, it already gives me information on if he's had that conversation. If he gives any indication, oh yeah, they have a lot of money, they're actually pre-approved for more, their debt to incomes are this, I'm going to auto counter that. So you're looking for someone that's going to hold their foot down in terms of revealing personal information, because listing agents, if they're doing their due diligence, they're going to want more money for their clients, right? So it's a different need, right? The other thing that we do is we call lenders. So let's say Assad is the lender on file. Assad, thank you so much. I received a mutual client of yours and Hassan's, and you have a pre-approval for 1.2, and I know they wrote 1.25. Usually our agents will cater the pre-approval to the offered price, but let's say it's not. Some agents don't. Some agents, if they write an offer 1.25, they give a pre-approval of 1.3. I automatically know they have more room. So we might count, right, depending on the response. So other things that we ask specifically.
I don't want to cut you off, but on the buy side, as a buyer agent, we will never put you in that position, because what I'm going to do is I'm going to call Assad like we did for other offers. We offered 1.35 on the house. He gave me a $1.35 million letter.
Yeah.
He can't see legally how much.
Right.
And my buyer was approved at 1.8, but we weren't going to give him a 1.8 letter because he would automatically know that buyer can go up.
But here's how fast things move. If all of a sudden you see the property and you want to write a preemptive, or there's no offer date, and you want to avoid a competitive situation, how fast is your lender going to respond to you? We've worked with lenders that are online, that are East Coast, that close at 2 p.m. That's not going to help your situation, right? You're looking for a lender that's responsive, that's local, that knows the local rules, that we might have a previous working relationship because we've won together before. We've already filtered out a lot of our partners because they're too slow or they've made mistakes or whatever it is. They say they could do a 25-day close of escrow, but they can't. So we're not going to work with these types of people, right? We want to work with people that are true to their word.
That might seem funny, but like when you're saying too slow, and Assad knows this too, when my buyer was working, he probably vetted 8 to 10 different lenders. And Assad ended up winning because literally this past Saturday when we were reviewing the home, we did the final tour and my buyer was like, I'm ready to put an offer in. I was like, okay, should I call the lenders and get the letter? He's like, no, I will. He called the top 3 lenders and he was the only one that responded, so he used his 1.35 million.
That's awesome. What a great example.
I mean, this is what happened. Like, and so it's like, it could be that your lender just loses 1.35 like that because you didn't answer his phone on Saturday. So
right.
who do you have locally that's going to fight for you?
Or you can talk about that agent that didn't answer the phone when Wilson called all the agents at Northcrest. And
so
it's just important to have an agent that's responsive, especially in negotiations.
That's a great example of the listing that we just had in South San Francisco. The top offer out of
highest price.
Out of 8 offers was the highest price. This was the agent. When we sat there with Wilson and we were calling each agent to say the exact question, does your buyer have room? She didn't answer until the following day at like 3 p.m. and we were already in contract with another offer.
Yeah.
And she said I was out for personal reasons.
So you have to look for someone, not only the lender, but the agent that's really responsible.
And she was the top offer.
Yes, because if someone's doing their due diligence, they're going to need information right away, right? That's how fast things work. And also one of the last questions I asked the lenders, what's the client's debt to income ratio? Now, that's kind of confidential information, but if the lender wants them to win, they might just answer my question. Oh, they have plenty of room, they're at 30%. Oh, they have room now, right? So these are things that, because I see a lot of on the listing side, I share this information with our team, so our buyer's agents are well equipped. So in case there's a diligent listing agent that is working on the other side, they're going to be able to first pick up the phone, second field the question. So, and then of course at the end of the day, the seller still makes a decision. But if it's well put together, there's a cover letter with the big fine print. There's a personal letter, there's a pre-approval, the contract looks clean. If the agent is from the area, he's going to know, or she's going to know specifically the county transfer taxes, what's a customary norm, who pays for what, are they asking for a warranty, do they have a short contingency even if we are providing inspections. These are things I pick up on and I share with the seller. So why do I share that with you is because on the other side, you just want to be prepared. And the way that you prepare is partnering with the right person who's going to be able to negotiate on your behalf, pick up the phone call, react really quickly, react the right way. So, any questions on that? Yes?
So as a listing agent, if you're asking the buyer's agents like, oh, do you have room? And they say, probably not. Would you think like, oh, I don't want to consider
It's something that buyer agents have to tread really lightly, right? Depending on the information I give, we have multiple offers. I just don't know if we're going to counter or just going to accept the top one. It's up to him to ask me, how close are they? What about the terms? How clean are my terms relative to everyone else? So questions, the good questions will get good answers. So, and Elizabeth, just keep moving forward. And we'll take questions as, just to be respectful of time, since there's 10 minutes until 8.
So after negotiations are done, then you get your offer accepted on those terms. Now you go into escrow, which Jenny will kind of wrap it all up for us.
To bring in the home, now we're in escrow, and that means the seller officially is selling the house to you, and that what you will have is a ratified contract. So what you will need to do once we have our offer accepted is have 3% of your purchase price as an earnest money deposit ready. Usually one of the negotiation tactics we write is putting it by the next business day to give the seller confidence that we're going to move forward with the deal. standard on the contract says 3 business days, but we write 1 to make sure that they don't go shop our offers around and go to find another buyer, for example, within that 3 days and potentially accept a different offer. So we want to make it sure, once it's in escrow, which is the third-party company, and they're going to hold the 3%, which goes towards your down payment and your closing costs. You work very closely to a lender to provide any documentation that they might need in addition, such as updated pay stubs, proof of employment, and those details, and getting a homeowner's insurance policy. Most people go with whoever they have with their car insurance, or we have recommendations as well too for great people to get homeowner's insurance, and providing that back to your lender. And then once you have that in escrow, you'll finalize, and it's usually with our close of escrows can take as quickly as 15 days. If you're getting a loan, 7 days if you're going all cash, and so it just moves very quickly. And we'll look at your timeline as well too. So title is the person who it's the legal documentation, and an escrow is where you're going to put your money into it. The 3% is the earnest money. And then a few days after you get your offer accepted, they're going to send a third-party appraiser. We don't choose an appraiser, the lender doesn't choose an appraiser, but they're just going to put it in the system, and it auto assigns an appraiser. Because back in prior to 2008, that's when people were manipulating numbers and adding value and hiring appraisers that they were friends with to get a higher value in the home to make sure it works. So now with that, the government is very strict on the guidelines, so you can't directly choose which appraiser. So once it appraises, you get in the appraisal report, then we are set to close, and you get a closing disclosure. What's the final amount you need to pay with the closing cost when you're 20, let's say 20%, plus closing cost minus your 3%. That's what you would put in a few days before the 15 days or 21 days for the close of escrow. And if you're renting, definitely letting your landlord know, hey, I'm going to be leaving the lease, or finding a subtenant to take over your lease, and then finalizing with the closing. They'll be getting the keys and celebrating. We'll bring some closing gifts for you guys. We'll do some fun photos in front of the house, a sweet home sign, and then afterwards, that is the final process. This is one of the home sweet home signs with one of our previous clients, and Clara. We'll do a final walkthrough. Then you can follow us on social media. We're on all these platforms, and we'll post some of our coming soons, our off markets, and other. We're doing a lot of content creations. Like you'll see Hamid Reza in the back. He's going to be videoing a lot of our coming soon things that are part of our off market business.
One thing Jenny forgot to mention is when you guys close successfully, you have to invite the whole team for dinner. If not dinner, a barbecue. Nice jar. But hopefully this has been helpful. We're going to stick around for a little bit just to be respectful of time. We'll have 5 minutes for questions, and also we have a raffle. So thank you guys for being here. And let's give a round of applause.